You play by the rules, save your money, but the goalpost moves further away, and the financial system feels like a game rigged against you. Standard education prioritizes subjects like biology and algebra, yet almost never addresses how an interest rate functions or how to read a balance sheet. Lacking this basic terminology forces you to rely entirely on institutions like banks and government planners to manage your financial trajectory. Manipulation rarely looks like a cartoon villain. It takes the form of a smiling financial advisor, an online bestseller tag, or politicians promising free programs. The economy functions as a massive communication network, broadcasting clear mathematical signals. To capture your wealth, manipulators flood the system with emotional noise to drown out those truths. Mastering the basic laws of human behavior and economics provides the tools to filter this noise and gives you the power to remove the blindfold. One common trap involves the principal agent problem. When you hire a broker to manage your money, their primary incentive isn't to build your wealth, it is to generate transaction fees. They get paid whether your investment succeeds or fails. Marketers also weaponize scarcity and social proof to trigger panic. By manufacturing an urgent deadline or claiming a product as a bestseller, they force your brain to make immediate, irrational purchases before your logic can intervene. This noise is loudest when it appeals to status. A $50,000 luxury car offers immediate social validation and leather seats today. This chart compares that initial cost to the potential of a long-term investment. If you had invested $30,000 of that car's price instead, in 30 years it would be worth nearly $250,000. Immediate gratification and social pressure are designed to hide these trade-offs, permanently stunting your ability to build wealth. In a functioning economy, prices and profits act as raw data. They are instructions that coordinate the actions of millions of people who have never met. This is why Margaret Thatcher told Mikhail Gorbachev that she didn't coordinate the British food supply. Prices did. No central planner can track the millions of shifting variables required to feed a major city every day. Deciding how much milk becomes cheese versus ice cream is a problem too complex for any human or computer. Prices solve this automatically. High prices broadcast a signal of scarcity, telling producers to make more. Low prices signal an oversupply, telling them to slow down. A price that makes you angry is simply an honest signal of reality. It reflects exactly how many people are chasing a limited supply. Economic disasters follow when politicians attempt to override these signals based on intentions rather than human incentives. When Maryland raised taxes on millionaires to increase revenue, they inadvertently rewarded those residents for leaving. 2,000 millionaires moved, taking their businesses with them and causing the state to lose over $200 million in total tax revenue. Rent control in New York City creates a similar distortion. By artificially capping the price signal, the city incentivized people to stay in large apartments they no longer needed, hoarding space while others had nowhere to go. When landlords can no longer afford repairs, buildings rot. Eventually, landlords walk away entirely, resulting in thousands of abandoned apartments in a city with a homelessness crisis. This signal jamming reaches its peak when central banks manipulate the money supply itself by printing fiat currency out of thin air. This creates the ultimate noise, inflation. It is a hidden tax that erodes your purchasing power, and in places like Zimbabwe, it can lead to total currency collapse. When price controls, bad incentives, and printed money collide, they trigger a Lollapalooza effect, a combination of forces that causes massive systemic crashes. Every political promise of a free program or urgent flash sale reveals itself as manipulative noise. You start recognizing the psychological triggers designed to bypass your rational mind before they have a chance to work. Protecting yourself requires a shift in perspective. Stop evaluating people based on their stated intentions and start analyzing their incentives. In a system where fiat currency depreciates, you must move away from saving cash and toward acquiring hard assets. Real wealth lies in things that protect you from the invisible tax of inflation. You must also respect the law of trade-offs. Your time, energy, and capital can only be used once. Success comes from directing them strictly toward efforts that create compounding value. Economic literacy grants you the ultimate superpower: total immunity to financial manipulation. You gain the ability to walk through the noise unharmed, while the crowd rushes past in a panic.